Welcome to The Deep Dive, your essential shortcut to being well-informed about the complex stories shaping the market. Today, we are deep diving into Rivian Automotive, symbol IVN, and they are at a genuinely pivotal moment.
It really is. It's a classic case of clearing the past to focus on the future. I mean, when you look at the immediate context, the stock has been strong.
Yeah, it's been on a run.
Up about 10.1% recently, trading at 22.45, which is actually slightly above its 52-week high.
Right.
And that momentum is facing two strategic forces at the same time: the definitive and expensive cleanup of post-IPO legal baggage.
And a big change in the boardroom, a really significant governance shift.
Exactly.
So our mission today is to connect these seemingly disparate events. We're going to unpack the details of that $250 million securities settlement. We want to understand the core flaw it highlights in Rivian's early business model. Then we'll look at the implications of a high-profile director departure.
And then tie it all together.
Exactly. Connect both of these events to the make-or-break product roadmap that is centered around the R2. We are, essentially watching Rivian shed its high-cost, idealistic startup skin.
And pivot toward a pragmatic mass market future. These are the inflection points you really need to watch.
They are.
The legal resolution closes a massive chapter of risk, and that governance shift, it signals a refocused priority on execution, just as the company prepares for its most important production year yet.
Okay, let's unpack this. Let's start with that settlement. The $250 million cash settlement in the Cruise v. Rivian litigation. $250 million. That is a massive number.
It is. Rivian, or, more likely its insurers, agreed to this back in October 2025. And you're right, this isn't just a big legal headline. It speaks to a core operational issue from their earliest days as a public company.
It absolutely does.
The core allegation here is crucial for anyone trying to understand Rivian's early struggles. The claim was that the company made materially misleading statements about the bill of materials cost.
The BM. Okay, stop right there. For our listeners who may not live and breathe manufacturing finance, what exactly does bill of materials cost mean in this context?
Great question.
And why did it become the centerpiece of a huge securities lawsuit?
So the bill of materials is the total cost of all the raw components that go into building a vehicle. That's before you factor in labor, overhead, R&D, anything like that.
Just the parts.
Just the parts. And the claim was that even without those other costs, the BLM for the R1 platform far exceeded the price Rivian was offering to customers.
So in plain terms, they were losing money just on the parts for every vehicle they sold.
Exactly. The R1 was fundamentally unprofitable from a manufacturing standpoint at that initial sales price. That is what eventually forced the company to announce that painful and heavily criticized price increase in early 2022.
So the lawsuit crystallized this idea that the R1's business model, the one they took public with, was, structurally flawed on the cost side. That must have created immense risk exposure.
Immense is the right word. When the initial complaint landed in March 2022, the defendants included not just CEO R.J. Scaringe and the CFO Claire McDonough,
right,
but also directors like Rose Marcario and Jay Flatley, and crucially, 21 underwriter defendants.
21?
21. Major institutions like Morgan Stanley, Goldman Sachs, JP Morgan. So when you eliminate a lawsuit this complex, you are not just clearing a line item on a balance sheet.
No.
You are eliminating years of management distraction, costly discovery, and frankly, existential risk for a huge cohort of financial and corporate leaders.
That complexity really explains the timeline then. The initial motions to dismiss were granted, then denied after an amended complaint.
It was a whole back and forth.
And the classes were only formally certified in mid-2024. So by settling in October 2025, they resolve all claims without any admission of liability, I should point out.
A key detail, always.
Before having to face a drawn-out public trial.
And that elimination of risk is the strategic takeaway. Now, for any shareholders who bought during that period, the eligibility is focused on when those alleged false statements were operating in the market.
Specifically between November 2021 and March 2022.
Right. The 1933 Act claims cover shares from the IPO itself, while the 1934 Act claims cover those purchased later on the open market during that window.
And to put the financial impact into perspective, I think with an estimated 211.5 million affected shares, the projected average recovery is something like, $1.18 per share?
About that, yeah. Before legal fees.
Before fees.
Exactly. And those legal fees, while standard for a case of this scale, they're substantial. Class counsel is applying for up to 24% of that $250 million fund, plus millions more in expenses.
It's a very expensive cleanup.
It is, but the strategic value lies in achieving finality. They have legally closed the book on the R1's pricing fiasco.
Okay, and here's where it gets really interesting. Just as Rivian finalizes this $250 million cleanup, getting rid of that legal ghost, we see a major governance shift involving Rose Marcario. She's officially resigning from the board of directors, effective January 1st, 2026, citing the need to focus on other commitments.
And this departure is just heavy with symbolism. It connects directly back to the company's identity. Marcario is the former CEO of Patagonia.
Right, Patagonia connection.
She served on Rivian's board since early 2021, and her presence was intrinsically tied to CEO R.J. Scaringe's stated ambition for Rivian to become the Patagonia of EVs.
She was the embodiment of that ethos.
She was. She represented that original, high-minded, mission-driven ethos that was the core of Rivian's investor pitch and brand identity.
So if the settlement signifies the structural failure of the R1's high-cost model, does Marcario's departure signify the end of the Patagonia ethos inside the boardroom? It feels like the company is pivoting from being an idealistic startup to a pragmatic, hard-nosed production company.
I think that's a very fair assessment. That high idealism is, well, it's difficult to maintain when you have to produce hundreds of thousands of vehicles profitably.
Yeah.
Her departure reduces the board size from 8 to 7, and while she remains the chair of the board of trustees for the Rivian Foundation.
So she's still involved.
In a way, she's maintaining a connection to the environmental mission, but her direct influence on the core business strategy, production, and cost control is now gone.
That foundation link is clever, though. It allows them to maintain the brand narrative of environmental responsibility without having that same focus dominating corporate governance.
And that foundation is a real player now. It was formed pre-IPO with 1% of the company's equity to make the natural world a stakeholder.
Right.
They've recently ramped up their philanthropy, announcing over $12.6 million in grants across 2024 and 2025. The mission continues, but the boardroom focus is shifting.
And if we look at the remaining board members, the emphasis seems squarely on technology, manufacturing, and financial scale.
It does.
You've still got John Krapsik, who led Waymo, and Aidan Gomez, the CEO of the AI firm Cohere, plus strong financial leaders like Karen Boone and Sanford Schwartz.
That composition reflects where the intense activity lies. Board service is immensely demanding, especially during a pivotal transition like this. I mean, we see this across the S&P 500, where committee chairs, the ones focused on audit, compensation, they're almost universally paid supplemental retainers. It just shows the level of responsibility.
A huge time commitment.
Huge. So stepping away to focus on other commitments during this phase might just underscore the sheer execution load the board is now facing.
So what does this all mean then? The legal cloud is gone, the symbolic idealist is out of the boardroom, and the stock is showing recent strength. How do we connect the resolution of these legacy issues with the forward-looking strategy that's actually driving the current optimism?
Well, it provides strategic clarity. That's the main thing. The market can finally stop pricing in the risk of that lawsuit, the ghost of the R1's cost structure, and instead focus entirely on the R2 platform.
Right. The R1 was a proof of concept with a flawed cost structure.
And the R2 is the pivot. It's the pivot to profitability and scale. Analysts are strongly focused on the next 18 months.
And the primary driver of that analyst optimism is the anticipated mid-2026 launch of the R2 SUV. That's the vehicle designed to unlock massive scale.
And critically,
solve the bill of materials problem that led to the lawsuit in the first place.
Absolutely. The R2 is targeting a much lower price point, around $45,000, which fundamentally changes the business math. This shift is enabled by the new manufacturing strategy centered around the planned Georgia factory. That site is being built to maximize efficiency for the R2, which uses less complex components and a more streamlined process.
So they're betting the farm on solving the production and cost issues from day one this time around.
They have to.
That's one half of the story. The physical vehicle, the production scale, the other half is the technology. Rivian recently held its inaugural Autonomy and AI Day. What did they reveal, and why is that so integral to their future valuation?
They detailed a serious commitment to becoming a software-defined vehicle company. They showcased their development of proprietary silicon chips.
Their own chips.
Their own processing hardware, and their next-generation autonomy platform. And this isn't just window dressing. It signals a major competitive move.
Why are those proprietary chips such a big deal, though? Don't all EVs use some kind of computer chip?
They do, but most rely on external suppliers, which limits your control over both cost and feature development.
Ah.
By developing proprietary silicon, Rivian can vertically integrate key technology components, much like Tesla does. This gives them immense control over system performance, energy efficiency, and speed of innovation. If they can execute this, it's a massive competitive advantage. It enables the high-margin, software-based features like enhanced autonomy that unlock future revenue streams and justify a tech company valuation, not a traditional automaker valuation.
So Rivian is essentially trying to perform two massive high-risk maneuvers at the same time,
That's it.
transitioning from a bespoke, high-cost manufacturer to a mass-market player with the R2 and transforming into a fully integrated AI and autonomy tech company.
Precisely. They are finally moving past the legal battles and pricing failures of the R1 era, but the path forward relies entirely on flawless execution of these two strategic pivots.
The settlement clears the decks for the R2 to succeed without those legacy distractions.
That's the hope.
This has been a fascinating deep dive into Rivian's balance of legacy cleanup and forward strategy.
Yeah.
It's a compelling narrative of maturity, but one filled with immense execution risk.
Before we wrap up, here's a final provocative thought for you to chew on.
Okay.
The stock price on the date the initial lawsuit was filed back in March 2022 was $42.43 a share.
Right.
Damages calculations for the case referenced a 90-day look-back value of $35.37. The settlement addresses the core claim that undermined that initial valuation.
The R1's cost structure.
Exactly. So given the stock is currently trading around $22.45, how significant is the company's reliance on the R2 and AI narrative to achieve not just positive market sentiment, but actual price recovery back to those contentious pre-litigation 2022 levels?
Does the new strategy fully legitimize that old high valuation?
That's the question.
A question that connects legal history directly to the next 3 years of manufacturing performance. Thank you for joining us for the deep dive. Now, quick reminder. What we discuss here is for informational and entertainment purposes only and is not investment advice. Please consult a qualified professional before making any investment decisions. This is not financial advice.
The required disclaimer has been made.
That said, it's time for the outrageous but plausible trade idea based entirely on the news we covered today.
All right, lay it on us. We need something that captures both the cleanup and the pivot.
The trade is this. We go long Rivian call options expiring right after the expected R2 launch in mid-2026.
Okay, bullish on the R2 launch.
We pair that long position with a short position in the stock of one of the 21 underwriter banks named in the securities lawsuit. Let's say Morgan Stanley.
Shorting Morgan Stanley because they were a defendant in a settled lawsuit. That's the poetic karma part.
Yeah.
But strategically, why combine the Rivian calls and the bank short? Are you playing pure momentum versus institutional distraction?
Exactly. The logic is poetic justice mixed with operational focus. Rivian succeeds wildly in its mass market pivot now that the bill of materials ghost is gone.
Okay.
The R2 hits the sweet spot, powered by their proprietary AI platform. Meanwhile, the 21 underwriters, they've just dealt with the distraction and financial cost of this $250 million settlement.
So even if it's covered by insurance, it's still a drag.
It's a significant institutional drag and a cost of doing business. The dramatic success of the refocused Rivian is a final market-driven punishment for the bank that helped lead them through that initial legally contentious IPO pricing mess.
Clean past, bullish future, and a little institutional karma on the side.
You got it.
Outrageous, perfectly plausible, and entirely grounded in the two major events we covered today. A nice way to close the book on the R1 era.
Thanks for diving deep with us. We'll see you next time.